Nigeria's Statistics Office this afternoon reported the country's headline inflation decelerated to 18.12%. Food inflation retraces slightly to 22.72%, but core inflation went up to 12.74%. These inflation numbers must have caught the analyst community unawares as forecasts were generally to the upside. Let's get the first word on this now from Wale Olusi, the head of research at United Capital Group. Good evening to you, sir, and thanks for coming through. I'm sure this is straight out of the blues, as it were.
Yes, it is. I mean, it is a very positive surprise for us. Our forecast was way higher than what was announced, and we've been looking into the numbers to find out what has really changed.
Yeah, that's the question. Well, what has changed? Your first word. What was your forecast at United Capital?
Well, our expectation was we were looking at inflation very, very close to 19%, 18.8% to be more specific. That was what we expected because we think month on month may very much continue at close to 2%, especially because of food. But this is a very, very positive surprise for us. And we've been looking into the numbers to see, what really changed.
Okay, so let's get started to the brass tacks. Give us your thoughts specifically on the food inflation from the latest numbers from MBS.
Right. I mean, what the MBS is telling us is that food inflation didn't, the increase in food inflation was moderated, meaning that the month-on-month increase in food inflation was not as fast as the previous months. In the month of March, month-on-month inflation in food was very close to 2%. But what they are telling us now is that in the month of April, it came in at about 1%, which is 0.9%. The only thing we could rack our head around for that is probably due to the Ramadan period. We suspect that food demand probably reduced because, a huge amount of our Muslim brothers and sisters, are fasting. So it looks like food demand actually dragged in the month of April, hence the slowdown in food prices. I mean, in the rate at which food prices increased, but core inflation sustained increments.
Yes, we'll talk more about the core inflation, but we'll need to look a bit further into the food inflation in terms of our imports and what of that. I would like to hear what your thoughts are on food imports for the month of March. We're just about into the planting season when food inflation or food prices tend to go higher.
I mean, right, you're very correct. I don't think it's much about imports. Don't forget, the central bank has a lot of, controls around what type of food we can import in Nigeria and what we can't import. A long list of items were included in the 41 item, and that has been updated recently to include maize and a number of other food that is actually affecting staple food such as bread. The issue of the border closure is also there, which has affected the price of, staples such as rice. Then, because you have a check on maize, there's a, snowballing effect on poultry and so on. So I'm not sure it's really much of imports, but I think is largely the domestic demand itself, because a good proportion of food consumed in Nigeria also come from here. The bulk of them from the north down here to the south. So I think it's largely demand, within the economy.
Okay.
Probably due to the Ramadan period.
Okay, well, we'll come back after the break. We'll take the latest inflation numbers to the market state with heads up on the coming monetary policy meeting. Stand by, everyone. Wale Olusi, stand by. We're back with you in about 2 minutes.
Right.
So we got a very surprising retracing in Nigeria's headline and food inflation figures in the month of April. Coming today from the Statistics Office. Let's get more perspectives on the economic data from Wale Olusi, head of research at United Capital. Wale, thank you very much. Is this deceleration likely to be a trend, or is it just a blip on the radar?
Well, thanks for that question, Bosin, and that's a technical question. Because if you look at the way, inflation is calculated, headline inflation is calculated, there's always a base impact also that we need to watch out for. So, whether this is going to be a trend depends on a number of factors. First off, we actually expect that from the second half of the year, probably even May, the month that we are in, the base impact on the technicality of inflation may start peaking, which may drag inflation lower going forward. And that's because on a year-on-year basis, if due to the pandemic and the lockdown that we saw last year, there was a spike in inflation, then the same period over the last 12 months, you begin to see a moderation due to that spike. But there are a number of other factors. Not too long ago, we heard from the NERC, the electricity regulator, that there may be further adjustment in the electricity tariff again. Now, if that kicks in July or June, depending on when they want to do it, that can also change the technicality and then neutralize the base impact. So, I mean, it depends on, policy implementation or, things such as electricity tariff adjustment or even subsidy removal. It depends. But if all of those things are not there, our expectation is that in the second half of the year, there's a likelihood for inflation to begin to moderate. But it looks like that is happening earlier than we expected based on what we've seen from the April figure. Awesome.
Okay, so do you think traders and investors would jump on this inflation? How do you think the investment market should trade the latest numbers?
Well, I mean, I think 18.1% is still very, very high if you compare to, the yield environment. I don't think this is completely an exciting news for investor, although the consensus expectation is that inflation will climb higher, which ordinarily will have forced, dealers to price debt securities higher and demand more from the central bank as well as the DMO. But with this is more or less a flattish outcome, although a slight deceleration from the headline number, but it's still 18.1%. It's still quite high. So maybe there wouldn't be a knee-jerk reaction tomorrow on the part of the bond dealers and the markets. Of course, also equities markets. There might not be a massive change, maybe until we start to see a consistent deceleration. But 18.1% is still very, very high. I don't see this as changing the views of trader around what to expect for yield. I think the general expectation remains that interest rates will still climb higher because we are still in a negative real return environment.
Yes, so I can see all the inflation still double digits, very strong double digits on the screen. But do you think the latest inflation will be a chief concern for the Monetary Policy Committee meeting holding next Monday and Tuesday at the Central Bank?
Absolutely. I think this is going to be a key consideration for them. At 18.1%, there's no way the CBN governor or any member of the MPC committee would have been having a very good sleep in the last couple of months because 18% is very, very worrisome. And a lot of people are complaining. And if you look at the spate of insecurity in the country, the kidnapping, the ransom taking, all of these things comes down to one thing. Unemployment is at 33%, inflation is at 18%. If you put that together, misery index is close to 50%. That's a huge concern for policymakers. We still need to do something to bring down inflation. And I think that will be definitely one of the biggest considerations for them, despite this moderation that we have seen. It will still be on the table whether to adjust the MPR or tighten monetary policy to see if there's anything that they can do on the monetary policy side of things to effectively tame, the rising prices in the system.
But definitely, it's not likely that MPC will be so moved by this particular data to move inflation. To move the MPC policy rate.
I think it's a 50-50 decision. If GDP comes out and is stronger, a number of MPC members are already pushing for a rate hike. I mean, so ultimately, I think it's a 50-50. They can move it and they can keep it. But either ways, they've been tightening from January from the OMO point of view. I think they will sustain that.
All right. Well, thank you so much for coming on the show tonight. Do have a pleasant evening. Wale Olusi, Head of Research at United Capital Group.